Now, Asian stocks started the day pretty well with the regional index hitting a 6-year high, but we saw some profit taking in the later sessions. China's official manufacturing PMI for June was pretty positive. It was the highest in 6 months at 51.0, just what the market was forecasting. The sub-index for new orders were looking good as well. New orders were tied for the highest level in more than 2 years. So it looks like we're starting to see some results from the government's stimulus measures. We also had some decent readings from the HSBC estimates at 50.7, which was the highest in 7 months. The Chinese data helped lift the Aussie dollar slightly for a while, but a few hours later we saw a real spike in the currency following the RBA's policy meeting decision. Once again, interest rates stayed at 2.5% as expected. There was very little in the RBA statement that was different from previous ones. It continued to say monetary policy was properly configured to foster sustainable growth. But this time, it added that the currency's value is offering less assistance than it might in achieving balanced growth in the economy. So that was enough to make investors more optimistic on the Aussie dollar. We'll be looking out for the Australian trade numbers tomorrow. Any positive data could help push up the Aussie dollar higher against the greenback. We saw it strengthening today on the back of RBA's comments, where it capped the interest rate at 2.5%. The market seemed to be more optimistic on the currency after the RBA said that the value was not doing as much as it hoped to achieve balanced growth. We also get more PMI numbers for Singapore, where we're expecting activity to be flat but expanding at 50.8. Investors will also be looking out for another round of PMI numbers on Thursday from China, Hong Kong and India.